Well, we saw this play out last summer, right? And oil prices surging, $100 a barrel. And there's a lot of pressure on the likes of Saudi Arabia, UAE, some of these OPEC plus countries to tap their spare capacity. It's some of the conversations that we've had with the International Energy Association, the IEA, they're saying that if OPEC had really opened up the taps, we wouldn't be in the situation today where inventories are low. And, we're seeing a big kind of a squeeze on the market. Now, the market has paused right now because we're looking at a lot of conflicting data, right? Prices have kind of been range bound around this Brent, around 85, 80 to 85 barrels per day in the last couple of weeks. People looking at the situation in China, obviously, and also the Russia-Ukraine war, the two big factors weighing on the market right now. And everyone's trying to look for direction. So this OPEC Plus technical committee meeting that you were talking about just now, they're meeting later today, and we're not really expecting a ton of change from them. What's going to be really interesting is if there is any kind of policy statement or any kind of reflection on where the market outlook is going to be, because that's what traders are going to be looking for, to see what OPEC is responding to in terms of what they're seeing with Chinese demand, what they're seeing in terms of Russian production losses with these sanctions. New sanctions, the EU embargo is set to go into effect February 5th, and the G7 price cap on refined products. These are all uncertainties in the market right now, and the market hasn't really had any clarity on these issues over the last couple of months. That's why OPEC Plus is.
Herman, I would add one more uncertainty to the market, because you've got Antony Blinken out here the last couple of days essentially pushing back or attempting to on Benjamin Netanyahu's very conservative government. And of course, one of the key questions there is not just the Palestinian issue, but the issue of Iran, and the White House essentially pegging the blame for the recent strikes on Israel specifically. And of course, no comment from the Israelis there, no surprise. But in terms of Iran and that outlier, I mean, the EU finally taking moves to potentially sanction or at least call out the Iranian Revolutionary Guard as a terrorist organization. I mean, these are serious moves and something we haven't really seen before coming from Europe.
Yeah, those Iranian geopolitics have really been kind of simmering under the radar of the oil market over the last year or so. And now, as you mentioned, with these attacks, they're starting to bubble forth. What we've seen out of Iran is really kind of a relaxing of sanctions enforcement by the Biden administration, allowing Iranian exports to kind of increase over the last month or so. It'll be really interesting to see if there is a tightening of that. Of course, any tightening of Iranian supply tightens the market. Oil prices could potentially go up. Again, the Biden administration is keenly focused on keeping oil prices at a moderate level. So let's see how they squeeze Iran. We've seen, as I mentioned, some sanctions enforcement relaxation there. Same with Venezuela. So the sanctions tool can kind of go both ways. And as the sanctions ratchet up on Russia, let's see what they do about Iran. It doesn't seem like the JCPOA is coming back anytime soon.